Ladies and gentlemen, good day and welcome to the Multi-Commodity Exchange of India Q4 FY2024 earnings conference call. Joining us on the call are Mr. P.S. Reddy, Managing Director and Chief Executive Officer, MCX, Mr. Manoj Jain, Chief Operating Officer, MCX, Mr. Satyajit Bolar, Chief Financial Officer, MCX, Mr. Chandresh Shah, Chief Financial Officer, Designate, and Mr. Praveen DG, Chief Risk Officer, MCX. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. P.S. Reddy, MD and CEO, MCX. Thank you, and over to you, sir.
Thank you, Mr. Ayo. Good evening, all of you. Welcome to the analyst call. I'm very happy that the MCX has concluded the year positively, having a payout to the IT vendor. We have closed this year also on a profitable note. While it may not have surpassed your expectations or met your expectations, but the company has done very well if you see in terms of the income, the highest ever income that we have achieved since inception. That's one big highlight of this. That is something which you all should acknowledge. And secondly, even the turnovers also have also clocked the highest ever, and that's another happy ending for this company for this year. And of course, other facts are before you. As we have been saying in the past, also we said that while the IT costs will come down, and they did come down in terms of operating expenses, but there's no a substantial reduction, because the depreciation costs will go up. So on the whole, the IT costs may remain on the similar lines as we had with the previous vendor prior to September 22. So that being the case, what makes the difference for us is that there is no volume-linked payments to an IT vendor. So that will come to a pause at some place, and I don't think we expect any rise in these IT expenses. There could be a marginal rise, but it will be in the same range as it used to be earlier. And the only thing is that we have to drive up our volumes, and once they start contributing, they all will go into the bottom line, and there won't be any expense linked to the rise in volumes is our expectation. I would not like to take much of your time. I think I will leave it open for questions. Thank you.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Also, in order that the management is able to address questions from all participants in the conference, we request participants to limit their questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Hi. Good evening, sir. So firstly, could you explain the reason for the drop in revenue sequentially in spite of the surge in volumes? And the second question is on the fact that you mentioned that the run rate would be similar to September quarter. And if I look at the numbers in September quarter, the run rate of software cost was around 20 crores quarterly. And if you look at depreciation in that quarter, was about, in Q2 FY22, was about 6 crores. So totally around 30 crores was the cost. Would you say that this would be the run rate that would be maintained? And lastly, on the product launches, when do we expect the gold serial contracts to be launched? Those would be my three questions.
Yeah. The second question I will answer immediately. When I said the September stuff will be maintained, that is at that point in time, yearly we were paying around 60 crores to the vendor. So that 60 crores is in the current dispensation, maybe a lower cost in terms of operating expenses, but higher depreciation may be there. Together it adds up to around that kind of 60 is the expectation that we had, and there won't be any transaction linked expenses. That is the reason we said it. We will continue to have around that that rate we will maintain. So it's not that 22's depreciation plus the quarter cost is what we were looking at it. The yearly cost on technology is what we were looking at it.
So this also includes the AMC fee that we pay to the TCS, right? This 60 crores that you mentioned? Right. Okay.
Should be. That's right. And coming back to the wide realization, you can explain.
Yeah. So good afternoon. So as you know, there are two main reasons why the revenue has dipped. Is one, our turnover in futures has dropped. So last year, it was last quarter it was 21,102, and this quarter it was 17,336. So around 18% dip. That has contributed substantially to the dip. Also, the treasury income that we earn on margin funds has also dipped by around 5 crores. So these two factors have led to a drop of 10 crores in our revenue. And 191 crores to 180.
The third is with respect to the new product launches. You are looking at the serial contracts. I think that is still work in progress, and it will take some more time. But whatever we can launch immediately, there are some more contracts which we have. Testing is going on. Being a new system, we want to be careful and then keep testing every time when a new product is launched, a rigorous test. That's why it is taking some time. Thank you.
Got that. Thank you.
Thank you. The next question is from Amit Chandra from HDFC Securities. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, you mentioned that the reason for drop in revenues is obviously futures and the lower treasury income. But also, if I see the options revenue, if I see the increase in the notional, the actual growth in the premium is much lower than what the notional increase is. So that is because of the lower premium conversion. So what has happened in terms of in this quarter, which led to the lower premium conversion, and how the mix has changed, which has actually led to this, and how do you see this premium to notional ratio going ahead? Because in other exchanges, as we move to more shorter duration contracts or weekly kind of a contracts, we can see further dip in this ratio. So this is one thing. And secondly, in the cost part, you said that mostly most of the cost is fixed, but still we have some part of the cost which is linked to the crude oil or the crude contract volume. So if you can break out in terms of the software support charges, how much would be the fixed and how much would be the variable?
Coming to the first question with respect to the option premium. The higher the volatility, people tend to trade in relatively 4-month contracts. So 4-month contracts means the lower premium, and as a result, our realization will also be slightly lower. But this is something which the market participants decide. At times we get a higher premium, and we will not be able to pinpoint the reason why in this particular quarter the premium realization is low, and then in other quarters it is high. Having said that, I think the weekly contracts or a serial contracts, I think that's not immediately not looking at it. I mean, in the not looking in the sense we do not have any approval. We are designing that contract, and then we will go to the regulator for approval. And definitely, if it is a weekly option expiry, the volume will increase, the premium will come down, and to that extent, they have to offset, and the volume increase should more than offset the fall in the premium. Then only it will make a commercial sense. So that's the way it is, and we are hopeful that such a thing will happen.
With regards to as per the agreement with CME, we pay 10% of what we earn on energy products to CME. So for this quarter, we have made a provision of 10.38 crores payable to CME as compared to 11.98 in the previous quarter. And that's forming part of the line in software support charges and product license fees.
Okay.
This 23.2 10.8 payable to CME.
Okay. And also, recently we got the approval for the FY participation, and we launched the crude oil mini contracts and the natural gas mini contracts. So obviously, these mini contracts will be beneficial for the volumes to rise. But in terms of FPI participation, how are you seeing this in terms of increasing the volumes? Maybe you can just elaborate more in terms of what impact it can have in terms of volumes.
So we expect the FPI participation to increase. Now we have category 2 also permitted, and many members have been asking for FPI 2 category also. And with that from Monday we have permitted. I'm sure it will pick up. Maybe in the coming 1 or 2 quarters, you will be able to see its full impact.
Okay. And sir, one last question from my side. So you said that most of the new product launches are in the pipeline, but if you can just provide some more color in terms of how much time it takes for a new contract to a device and it to be tested in the market and to be cleared from the regulator. So any timelines that if you can give in terms of for a totally new contract, how much time it takes? And because why I'm asking this is because index options, we have the approval since last 1.5, 2 years, I think. But still we have not been able to do anything on that. So, what is stopping us from launching index options?
No, I don't think we have any approval for index options as yet. Index options were permitted by SEBI by way of a circular saying that, index options will be permitted in commodities. So now that regulatory enablement has been made, we have to now make an application to SEBI and then get the approval. The whole process may take, from the time we get the approval to launch, maybe 4 months is 4 to 5 months, 4 to 6 months we can take it. But then we will get the approval. Usually SEBI has been very quick, and they may take about 2 months time to give approval. So all in all, 5 to 8 months is what the range I will look at it.
Okay, sir. Thank you and all the best.
Thank you so much.
Thank you. The next question is from the line of Chintan Seth from Giri Capital. Please go ahead.
Thank you for the opportunity. Am I audible?
Yes, you are.
Yes, thank you. Sorry for the noise. If you can break up the options and futures transaction revenue, that would be helpful for me. That's one. Second is on if you provide some more color on the product launches. You gave out certain names, but if you can just what are in the pipeline, what we can expect this year and what we can next year in terms of product launches, that would be helpful. These are the two sets of questions. Thank you.
The quarter we earned 149 crores as transaction charges. 46 crores, that is around 31%, came from futures, and the balance was from options.
Okay. Well, with respect to product launches, we have got some agri commodities also. The cotton wash oil we have got, as well as the sunflower wash oil also we got it. And these are agri commodities, of course. We are testing it again. And index options is another one which we will apply for. And then shorter duration is another one we are looking at it, as we said. But any kind of indications and that guidance is not a good approach, is my view. That's why we are not giving any guidance when we can do all this. But this is on the top of our mind, and then pursuance also. That's the way I can say.
Okay. And FPI2, you said category have been permitted. So have we started onboarding to our DMA lines, direct access?
That's what I said. Yeah. We have already permitted with us from Monday. Already issued a circular also last Friday, Saturday. So sure. It is for members to keep on applying for it, and then category we will be approving it. That's why I said you will see the full impact of it in the next 1 or 2 quarters.
Okay.
Thank you.
That's all from me. Thank you.
Thank you. The next question is from the line of Lavanya Totala from UBS. Please go ahead.
Hello. Thank you for the opportunity and congrats on good set of numbers, sir. So just on the new products again. So on these, which we have already applied or in the process of application, and wherever we are in the process of getting approval for different products, can you help us a bit more on this, maybe specifically on the weekly contracts?
So, as I said, weekly contracts, it is a work in progress. We have not applied as yet, but that is something which we are, we have to, make the system ready. Then only we can make that attempt to apply. But these two are parallel processes we will be doing here. But more important is there are, new products we have identified, but it's not good to, as I say, disclose at this point in time. But whatever we have applied, we have already said. Some of the mini contracts in metals is what we have asked for. Some more. Those are still under the consideration. And the other set is the electricity futures, and that is evading us all the time. And we have been, it's a very elusive target. That's the way it is. And we have been chasing it quite for some time. And I don't know when we will be able to meet that.
Okay. And the products which we already have approval are?
We have a gold, 10-gram gold contract. We have it. That's something which we will.
It's the monthly one or the usual 10-gram?
It's a monthly.
Monthly, okay. So that we have approval, and now it's in our hands to launch.
Yeah, that's right. We are testing it. So, thank you.
Okay. So, any timeline that you see to apply for weekly options for approval?
No, as I said, madam, applying is the easiest thing to do it,
Okay.
But the point is we need to get the system in place. And I don't want the gap between getting approval and then launch. So we wanted to bridge it, and then The moment we get an approval, maybe within a month's time, we should be able to launch. So that's what we are currently focusing on. And so let the system be ready, and then we will be able to do that. And the moment the moment we get a cue that yes, we are about to, we are there almost all, then we will be able to do that.
Okay, got it. So this is like once we can launch our monthly, the product approval will be similar for fortnightly, weekly, and everything, or will it be separate contracts which you need approval?
No. We will be issuing monthly contracts which are expiring every week. That is the way it is.
Okay.
So there will be multiple contracts in a month.
So this will be each commodity-wise you will need to take approval again, right? So crude and natural gas.
Absolutely.
Each commodity will need approval separately for each of these.
Absolutely.
Okay.
The development is only one. Yeah.
System will be ready for all of them. Got it. Thank you. Thank you so much, sir.
Thank you. The next question is from the line of Deepak Singh from ICICI Securities. Please go ahead.
Hi, sir. Congratulations for the good set of numbers. My simple question would be from the product line. Sir, if you look at your performance of index derivatives or index futures, so apart from Bulldex, there is much of traction as of now. So are we looking at launching some composite index, like a mix of bullion, energy, and metals, so that we can have some traction in the index? Because if you look at the other exchanges, so the major volume generator is the index derivatives. So are we looking at as a composite index for MCX as of now?
Well, we have a composite index, but we are not looking at it because volatility drives the any product, and many of times these cancel out each other. Some of the products are in opposite buckets, so they cancel out, and there won't be any volatility. But we are keen to revive the metal index, and the other one is the energy index, and then on which we would like to launch options. So that is where I was telling some time ago, options is what we are looking at applying for.
Right, sir. So on a similar line, sir, if I am not wrong, please correct me. We have got approval for the electricity future long time back. I think more than a year back. So are we going ahead towards launching any product in the electricity futures?
We have not got any approval as yet. No exchange has got that approval.
Something was on those lines.
We have applied only. We have applied 2 years ago and pursuing.
Okay. Right.
Thank you.
Thank you. The next question is from the line of Dhaval Parekh from IIFL Securities. Please go ahead.
Good evening, everyone, and thank you so much for the opportunity. I hope I'm audible, sir. Sir, in this quarter, we have added around nearly... Hello?
Yes, we are able to hear you. Please go ahead.
Yeah. Sir, so okay, thank you. So in this quarter, we have added nearly 8.5 to 9 million UCCs. So it's a sharp jump. If you see on a year-on-year basis, we have more than doubled. So can you just highlight the reasons for such increase? And my second question is, although our UCC count has sharply increased in this quarter, our traded UCC data that you provide in the presentation highlights that the traded UCCs have declined on a Q-on-Q basis. So the reason for such anomaly, sir, if you can provide.
No, but actually, the traded UCCs in options have gone up. Okay. The earlier it is 3.5 and it is it's 4 now, quarter on quarter. In fact, it's been increasing. If you see for the entire year, if you see futures, last year it is 22-23, it is 2.7 lakhs. Now it is 4 lakhs. this current financial year 24, and options in 22-23 is 4 lakhs. Now it is 7.3 lakhs. So it's gone up. And even options also, if you see Q4 of 22-23 is 2.3 lakhs. Now it is 4 lakhs. And the previous quarter, the sequential quarter is 3.5 lakhs. It's gone up.
Okay. And sir, increase in this UCC, sir, in this year? In this quarter specifically?
This quarter it is the total UCCs traded are 5.3 in this quarter. That is Q4, 5.3 lakhs.
Sir, not that. I'm talking about the 23 million UCCs that we have currently. The last.
In fact, I have been cautioning the members or cautioning the people. Don't go by that number because we are a unified exchange. Members are also unified members. When they are uploading it, they are uploading it to all exchanges, all maybe depositories, wherever they are members. They are simply uploading it because we don't know when the client will want to trade in commodities and when in NSE or BSE. So this number is not the representative of what is happening on the exchange. So my suggestion is to go by what we are publishing with respect to the traded UCCs. And that is very more relevant rather than this number.
Okay, sir. Got it. Thank you. Thank you, sir.
Thank you. The next question is from the line of Arpit Shah from Stallion Asset Management. Please go ahead.
Yeah, hi. Am I audible?
Yes, you are.
Yeah, I just wanted to understand the cost structure. How do we look at the cost in terms of employee costs and other expenses for FY25? Like, can we assume to build in a 35 crore run rate for employee expenses and about 15-17 crore run rate for other expenses going ahead? And I also wanted to understand the 60 crore software cost. I think so you mentioned earlier in the call. How should we look at it on an annualized basis? Depreciation plus software support charges and product license fees. How should we look at it?
As I said, the software costs, be that maintenance or AMC, all inclusive, plus the depreciation together will be in that range. And this is not this last quarter I said, this is maybe 2, 3, 4 quarters before also I have said that. So that is what we are going to maintain it. Expected to maintain. But other than that, what you are asking is whether you can give a forward-looking statement whether the employee cost for the current year will remain the same. I will not be able to say anything on that. We are keeping a tight control on it, and probably the cost structure will also more or less stabilize in the next 1 or 2 quarters because post-implementation of the CDP, we had taken certain premium services, etc., of some of the vendors. Vendors means not the TCS. We are talking about, called DB2 or Linux or I don't know what are all the softwares that are there. So premium services are needed to attend to us like 24/7 online kind of thing. So I think we need to wait for this cost structure to settle down for another maybe a quarter or 2.
Got it. So we should, there will be a inflation kind of jump in expenses that is what we're trying to write, right? There will not be any significant change that we would see in employee expenses and other expenses.
At least I don't foresee, a huge recruitment drive on the exchange.
Got it. And the software charges will be around 60 crores a year annually.
That's what we expect.
Okay. And the new product launches, are we seeing any kind of delay?
We already explained that new product launches.
Are we seeing any kind of delay because we've pivoted from 63 moved to TCS almost now 5-6 months back? So are you seeing any delay in terms of product launches or the approvals are getting delayed?
See, as I said, some of them we have to be applied. Whatever we have applied and whatever approvals are received, they are being tested. Two of the important products are already launched from yesterday. that is crude NG and natural gas NG mini options. And, the other one which I said that the gold 10 grams monthly contract is under testing, and also the cotton candy which is going to be launched maybe from the new season, and that is also being tested. While products are also being tested, some of the functionalities are also we are releasing it. So we have to be cautious about it. In our urge or our desire to launch everything, we can't put the system to danger. That's why we are cautious in our approach.
Hello? Got it. Just one request from the management. If you all can publish the premium numbers as you all have been publishing the turnover numbers on an everyday basis, that would be easier for everyone to track.
We will try to do that. We will try to do that. I will try to address this. Thank you.
Thank you so much.
Thank you. The next question is from the line of Shreyans Jain from Electrum PMS. Please go ahead.
Hello.
Go ahead, please.
Yeah. So, most of my questions have been answered. I just have two questions. Can you provide the breakup for the total income for the whole year in transaction fees, float income, and other income like membership and others? And second, any update on the interoperability?
I will answer the second question first. See, the interoperability in the sense that is implemented BSE and NSE, at least that is not on table or not on our cards, and we have not thought of it. But we are looking at the fungibility of the collateral in the sense of the term that the trading in one of the exchanges stops at maybe, or put it this way, let the collateral be there wherever they are, and whenever the member wants to transfer his collateral to the other exchange like MCX, the other exchange will just mark a lien on that amount in favor of the MCX Clearing Corporation, and MCX Clearing Corporation in turn will distribute. And this is the proposal that was submitted, and the industry forum, standards forum of members and others have recommended SEBI. I think that is a work in progress, and we are hopeful that it will be done at the earliest. Thank you.
Very on the total revenue for the year from operations, it was 684, and out of that 560 was from transaction charges, and around 84 crores we earned through the interest income on the margin funds that was placed with the clearing corporation.
Okay, and the remaining 40 crores is the other income of the membership fee.
Yes, the vault charges,
vault charges, membership, data feed.
Okay, thank you so much.
Thank you.
Thank you. The next question is from the line of Parth Agarwal from Bastion Research. Please go ahead.
Hi, thank you for the opportunity. I just have one question and I need a clarity on the software support charges. So out of this 23 crores, I understand 10-11 crores is payable to CME. But what is the rest of the amount that we have paid during the quarter?
See, the TCS software comes with a 1-year warranty. So first year we don't pay anything, and there could be other license fees, etc. That's all.
So this 10. So every quarter we'll be paying around 10.
I am saying you have to wait for 1 or 2 quarters more for most of the tariff structure or charge structure to settle down, stabilize.
Got it. And so post October 2024, we would be paying AMC charges. Any clarity on how much we'll be paying to TCS for that?
That's what I said in the past also. It's a single digit.
Okay. Got it. Thank you so much.
Thank you. The next question is from the line of Bhavya Sangvi from Fortress Investment Group. Please go ahead.
Hello. Am I audible?
Yes.
Sir, I just missed the revenue earned from the option segment for the fourth quarter. So just give it to me. Rest of the questions have been answered.
Yeah, so from the options, it was 103 crores for the quarter.
And treasury income for the quarter?
Treasury, I'm assuming that you're saying from the clearing corporation. From the clearing corporation, that was around 21 crores.
Your own.
My own or...
Why you pick?
Thank you.
Thank you. The next question is from Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah. So just this 560 crores that you mentioned of the transaction, could you split into options and futures?
Yeah.
For the year, full year.
Just give me a minute.
Sure.
For the whole year. Yeah. So it was for the futures, it was 208 crores, and options is 351 crores.
351. Yeah. Thanks. Just sir, on this serial contract, I just needed certain explanation. So you currently have multiple contracts of gold. Which of them will come on serial contract?
Well, we are looking at primarily into the crude and NG to begin with, because they are cash settled contracts.
Okay.
Then thereafter we will look at other contracts.
Okay. Okay. And with respect to gold, we had bi-monthly futures. Now we have approval for monthly futures. Is that the right understanding?
Monthly futures for 10 grams, but whereas what bi-monthly is 1 kg.
Okay. Okay. And do you have the approval to launch options on monthly futures of this 10 mg, or you'll have to apply for that?
No, we have not launched the futures, so the question of getting approval for option doesn't arise.
Okay. Got that. Thank you so much, sir. And just one more clarification. This quarter depreciation is, just gone up from 11.3 crores to 13.8 crores. Is that only 15 days possibly was where you didn't have the CDP? So is this the ratio that we can take for depreciation charge, or is there anything that else could needs to be looked at?
No, the 15 days is in the last quarter, but not this quarter. This quarter we have a full quarter.
Yeah, so this is the run rate. 14 crores. Okay. All right, thank you.
Thank you. The next question is from Chintan Seth from Giri Capital. Please go ahead.
Thank you for the opportunity. Just a couple of clarification. One, you already mentioned that gold 10 mg will be monthly future contract you are currently testing, right? That would be one, right? It will be monthly future contract. Gold 10 mg currently in testing is monthly future. Okay. And cotton candy, which we are talking about, is also futures contract. We were not currently having this contract. Is it so?
We have currently have this contract, and there is a change in the contract specifications, and the new contract will be launched from the next quarter.
Okay.
Next season. I'm sorry.
Next season, once the
so
supply
that is actually September, October onwards.
Right. Okay. And lastly, on the CME charges, that is a recurring fee on the revenue on the NG and the energy basket which we generate, right? Both on futures and options put together.
That's right.
Okay. That would be great. Thank you. That's all. Bye-bye.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Rahul Agarwal, who's an individual investor. Please go ahead.
Hello.
Yeah, go ahead, Mr. Rahul.
Good evening. Thanks for the opportunity. My question is regarding the average realization that you provide on the slide number 3. Is it pertaining to the future segment only? 2 lakh rupees?
Yes, it's on the future.
So what is the average realization in the option segment? If you could quantify that.
40.83 presently per lakh.
40.8. All right. Thank you.
Thank you. The next question is from the line of Shreyans from Arthya. Please go ahead.
Yeah, thank you. Thank you for the opportunity. Actually, I missed a question before. What is the reason of option premium ratio to turnover drop? Hello.
See, if the contracts traded are at the money or in the money, then the premium paid is higher, for which reason you will get a higher transaction charges. If the contracts traded are far away from the in the money or at the money, then obviously less premium will be paid. That's what the reason is.
Okay, so that is the main reason for that, right?
Yeah, exactly.
Okay, thank you.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to Mr. P.S. Reddy, MD and CEO, MCX, for closing comments.
Thanks to all of you once again, and continue to support MCX, and we will do our best. The team will do their best to ensure that the exchange will surpass everybody's expectations in the years to come. And the technology issue is behind us, and I'm sure you all know that that has taken a lot of time and the entire energy of the management in putting up the new platform. Since that is behind us, the management can concentrate on business development, and going forward, that is the only thing that we will do, and see to that the company meets the expectations of all stakeholders. Once again, thank you, and I wish you all the best. Thank you. Thanks to all of you.
Thank you very much. On behalf of Multi-Commodity Exchange of India Limited, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.